There's actually never been a better time to apply and access financing. It's really been interesting with all these talks of inflation, rising interest rates, recession. There's been a lot of things happening in the business lending world and lending in general. Rising interest rates, if you're going to get a home mortgage now, rates have gone through the roof, so it's absolutely probably not the right time to be refinancing. Hopefully those rising interest rates will bring down the cost of real estate and balance some things out, and also help slow down the rate of inflation. It seems like it's starting to work, which is a really great thing. On the business financing side, if you have an SBA loan or any type of financing that is prime plus, it's definitely, you've definitely been affected. Rates have gone up, over 1 to even 2% now. So if you have a floating rate on your SBA loan that's tied to real estate, or a working capital loan, or a receivables line of credit that's tied to prime rate, then it's definitely been affected for you. But more importantly, what's happening with all the talks of recession and different things is that it's made the banks were really starting to see tighten up and really dig in when they're looking at the business owner's application that's applying for financing. What's really interesting in the fintech alternative lending world, it's got extremely competitive. I think a lot of companies have a lot of dry powder, or AKA a lot of money on their hands, on their balance sheets, and they're looking to lend it. We've actually seen the fintech alternative lending world rates come down, even though interest rates are coming up. And then on the banking side, rates have absolutely gone up and banks have tightened up. So it's a really very unique market right now. What's really interesting though, and I talk about this with business owners all the time, if you've got bank financing, rates have come up, but the rates are still great. Maybe now you have a rate of 5, 6, 7, maybe even 8%, and maybe that rate, was 4, 5, or 6% prior to rates going up. Owners ask me this all the time, and I see a lot of owners will get caught up in 1 or 2% on the interest rate. Now listen, as an owner and entrepreneur, we all always want to get the best deal, so I completely get that and respect that. If what you're using money for, unless it's something that's like high volume, ridiculous volume, and really, really low margin, so you're looking to make really, really like small spread, but on a lot of volume. In most businesses, if interest rates go up 1 or 2%, whatever it is that you're looking to use money for, 1 or 2% shouldn't affect your opportunity. Like if 1 or 2% is affecting you and your business and what you're looking to use capital for, then maybe you should relook at what you're using money for and your opportunity. Maybe you shouldn't do what you're doing. Maybe there's too much risk there if you're only making 1 or 2% margin. Maybe you need to look at repricing what you're doing, or maybe you need to look at where you're using capital and putting that money to work in other places. I think that's something to really think about. I talk about that with business owners all the time. You really got to dive into your ROI and make sure that your returns are still there and your margins there. It's really important. So let's just say your cost of capital is 10%. Rates have gone up, things are crazy, you're at 10, even 12%. What you have to understand is what's your sales cycle? If you're buying things and reselling them in 30 days, then annually you're actually making 96%. Because if you're making 8% a month and you're able to turn money monthly, that's something that you really need to look at and understand your margins, and also how to use other people's money to increase what you're doing. And most business owners don't understand or get their ROI, their own margins, and more importantly, how to use financing as a tool. Don't get wrapped up in interest rates, get wrapped up in your opportunity, get wrapped up in your business, get wrapped up on what you're looking to use money for, and don't worry about nickel and diming 1 or 2%. Worry about, do you have enough margin and how do you win in your own business right now?